rent basically doubles every 10 years. So if I've got a payment at 2 and I can rent it for $2,400, my payment in 10 years is still $2,000, but the rent is 4 or $4,500. So think about the compound effect of all the properties I've been buying the last 5 years. It's stupid. Wait 5 more years and my cash flow on my property will be like $1 million a month.
That's insane.
It's stupid. The big challenge for me is I used to flip a lot. We do flip. Obviously the TV show that we have, we flip. But the problem with a flip is that where am I building my wealth? The challenge on a flip too is you make 50 grand, but you get 40.
Yeah, to an extent, he is right. There is a way how real estate investors can use things like depreciation to offset not only their rental income, but also other income if they're a real estate professional, or maybe if they have a short-term rental in which they materially participate. And in regards to the fix and flip, he is correct. You do pay more taxes on fix and flips because you do end up paying more taxes on the profits of your fix and flips because the fix and flip profit is actually considered self-employment income. And you will have that 15.3% self-employment tax added on to your profit from your fix and flip. So he is on the right path. And if you're into real estate, you should understand the taxation of your different investments. If you're going to do a fix and flip, the profit is subject to ordinary income tax rates plus self-employment tax. If you're going to be an investor, you're going to rent the property out to tenants. The rental income that you receive is considered ordinary income, whereas if you're just going to be an investor that has a property that has tenants living inside of it, the rental income you receive is considered ordinary income. Whereas if you're going to be a landlord, you're going to actually rent your property out to tenants and they're going to pay you rental income, and therefore you don't owe that additional 15.3% self-employment tax on your rental profits. Not to mention you could use accelerated depreciation strategies to offset the rental income and sometimes draw it into a loss. Now, one thing I do want to clarify, and this is for anyone who is considering doing an accelerated depreciation strategy, whenever you do eventually sell your property, you do have to recapture all of the depreciation you previously claimed back as ordinary income, and it adds on to your capital gain. Many times I work with investors who are going to sell a property and they don't actually consider the fact that they have this depreciation recapture and they end up with a larger gain than what they were expecting. We'll just leave it at that.